Hello guys, this is Oba FX Trading Academy and welcome once again to my YouTube channel dedicated mostly to the top-down analysis of different financial securities. And today we're going to be looking at a Forex currency pair, the CHFJPY. So that's a CHFJPY, which is the Swiss franc paired against the Japanese yen. So without wasting much time, let's get to it. As you all know, I do my top-down analysis using pure price action trading strategy where we work our way from the higher time frame to the lower time frame for probable trading opportunities. So currently I'm on the monthly time frame, and what we always try to do is to get our directional bias from the monthly time frame. And mainly looking at what we have before us, we can see that for quite a while now, the Swiss franc against the Japanese yen has been going upwards, and this can be seen by the series of higher highs and higher low that this pair has been making. Higher high, higher low. It's made a high, higher low, and it's just most recently made a high. And we can see that even though it had just made a high, it had not only done that, it had broken out from a range from a ranging market for a while now. And then from this candles, the green candles that we can see for the past 1, 2, 3, 4, 5 months, the market had been going upwards. However, if we look closer, can see that for the past 1, 2, 3 months, there has been a battle between buyers and sellers. And currently, from this red candle, we can see that sellers are currently in control of the market. However, that doesn't change the fact that this particular currency pair is in an uptrend, and that's why we can easily put our trend line here and draw upwards. And we can see that we already have several touches of this trend line. So the question is, what's my directional bias? So it's true, my directional bias is that CHFJPY is in an uptrend, but however, from what we can see, there seems to be a possible retracement because it just broke out of this range that has been happening for a long time. So the question would be, where do we believe this retracement will be coming to? If I'm to place my Fibonacci retracement tool here and I do this, then I believe that it's going to be coming back to the former resistance zone of the range, which would now be acting as what? A support. So my initial take would be that although this particular currency pair is in an uptrend, I believe that the market is trying to retrace down to this Fib golden zone, which is the zone between the 0.5 and 0.618, which would also mean coming to make another touch of this trend line on the monthly time frame. So like I would say this would be like the perfect scenario. So the market coming down back to make another touch of the trend line, and then coming into the Fibonacci retracement golden zone, and then we can start buying the market. However, this is the monthly time frame. So this story or this picture that I just painted would take months and could even take a year to happen. So the question would now be, how do we focus on the most recent happening in the market or a more recent happening in the market? To do this, we will have to go to the next lower time frame, which is the weekly time frame. And if you've been following my analysis, what we try to do mainly on the weekly time frame is to look for a most recent structure or chart pattern in the market which we can work with. So if we're looking at this now, our take from the monthly time frame is that we expect a retracement to come into this place, and then the market starts going upwards. But the question is, do we believe that the market is ready to do that now? Even if we are seeing this big red candle pushing downwards, another thing that should be of importance to us would be this level. Now, why do I say this level? If we look at the market structure, we have a higher high, a higher low, a higher high, a higher low. This is a valid higher low because it ended up producing a high. So for the market to successfully come down to this place, it has to take out this level. So if we go to the line graph to assess the immediate structure that we have, we can see that it's a simple bullish structure, which means our directional bias now would be to look for buying opportunities, to look out for buying opportunities until this higher low is taken out. So unless price takes out this higher low, there's a retracement, then it wouldn't make sense to start looking for sales into this particular level. Now, having explained this, it's time to make my chart less cumbersome by removing these tools. So take this out, take this out. So if I'm to zoom in, it simply means that the structure I'm working with is this simple bullish structure where the market came here to form a higher low, gave birth to a higher high, and it is currently making a retracement. Now, I've explained how to trade this particular structure before. It's quite simple because if we have this, this, and now we're having a retracement, all we simply need to do is to wait for a change of character and start looking for what our buy trades to the upward direction. Now, how do I mean? If I'm to place this here as the initial support from the uptrend, we have our retracement coming into the zone. And like I always explain, price has the liberty to come down into this area. And once there's a change of structure, then we can start looking for a buying opportunity because the market is in an uptrend. But once this higher low, the initial higher low is taken out, that's when we say that the market structure has what changed, and then in that case we can start looking for what selling opportunities. So in this case, what we have is still a bullish structure. So all we now need to do would be to add our other confluences. So as you all know, I like using three basic tools: support and resistance zones, Fibonacci retracement tool, and trend line. So this is the initial trend line we got from the monthly time frame. So on this weekly time frame, we'll have an opportunity to impute another trend line, which will be like an internal trend line. And if I'm to zoom in, this is the structure we're working with. I can impute my Fibonacci retracement tool from this swing low now to this swing high where the market is currently retracing. And then, of course, I have what I call the Fibonacci retracement golden zone, which, as I stated earlier, is a zone between the 50% or 0.5 and the 61.8% or 0.618 mark. So I can map this out, which, because we are dealing with an uptrend, is now acting as what? A support. And to give more credence to this, I can pull it a bit to the left side to see if there's an initial record of it acting as either a support or resistance in the past. And from what we can see, these two weekly candles were once rejected, so it acted as a support in the past, giving it more credence. So now the next thing would be to add my internal trend line from this zone now upwards. Let's draw it properly. Okay, let me use another color because to make it different from the initial trend line. Okay, so the next thing to do would now be to go to the next lower time frame, which is the daily time frame, where I believe we can now see what we've drawn clearly. So if we look at it properly, let's make the necessary adjustments to this trend line to have as much touches as possible. Okay, we can see that from the structures that we now have, or from the confluence that we have, we can say that price is currently at a key zone. So the market makes a high, makes a higher low, a higher high, and this is the retracement we are seeing. And we have several touches of the trend line. So my take would be that once we are able to get the change of character within this area in the much in our entry time frames, then we can start looking for what buying opportunity. Now let's not forget that our initial take from the monthly time frame was that price is going to retrace into the zone. So there are possible scenarios that can play out here. Of course, we can see that for some days now, for 1, 2, 3, 4 days now, the sellers are trying to push the price downwards by one of the retracement we saw from the monthly time frame. So once if the sellers are able to take out this level and take out the most recent higher low, then we can start looking for what selling opportunities into this area. What do I mean? This is the most recent higher low. So unless this higher low, like I stated earlier, is taken out, then it doesn't make sense to start looking for what selling opportunities. But so long as price is still within this area, above the trend line, within the Fibonacci retracement golden zone, and above this area, then it is still valid or reasonable to start looking for what buying opportunities. So how do we look for these buying opportunities? We do this by going down to the much lower time frame, either the 4 hour or 1 hour time frame. So let's see what's happening on the 4 hour time frame. Now on the 4 hour time frame, we can see that even though the market is in an uptrend, the current character of the market is what downward trending. So until there's a change in this character, let me take this out. Until there's a change in this character of this market, then it is not advisable to take our trades. Now, what do I mean by a change in character? We can see the market is making lower lows and lower highs, lower lows, lower highs. So long as this continues, then it doesn't make sense to start looking forward to start taking our buy trades. So the only way we can do this is to if we have a structure like this. Now, this will mark a change in character from the downward movement to telling us that the market wants to go up. And then when this happens, like a retracement, then we can now what take our buy trades. So the change in character in this case would be here. So once we have this, from this downward movement to this, then we can take our buy trades with our stop loss underneath the most recent lower high. So another alternative or another probability would be that, just like I said, would be price continuing in this downward trajectory, taking out this level, and then it continues downwards. Then in that case, we can now look forward, wait for a retracement. Once this level is taken out, then we can wait for a retracement and then jump in to continue the sell opportunities. That means in that case, we'll now be riding on the retracement. So if I'm to take this, another way we can get into this trade also, aside waiting for a change in character, could be to help us, would be place what a counter trend line. So we have a counter trend line here. So the change in character will still come into play because then it will have to mean taking out this counter trend line, and the retracement would be like a retest to retest the trend line, and then we can take our what buying opportunity. So this is my own market outlook on the not so popular currency pair CHFJPY. So if you're into trading this particular Forex currency pair, whenever you come across this, you can compare this to your own analysis and monitor the market to see how this plays out. So if you are coming across my channel for the very first time, like I said, what we basically do is top-down analysis of different financial securities. And if this analysis makes sense to you, then I would advise that you click on the subscribe button for subsequent videos. You can also like this particular video and share with others to gain from it as well. I have a free Telegram group where from time to time I drop free trading signals. You can click on that to subscribe to the channel. Thanks for stopping once again by my channel. Like I said earlier, this is a trading academy. Our October classes started off yesterday, and if you're interested in joining our mentorship program for a reasonable fee, you can reach out to me via the details on my YouTube bio. Thanks and have a wonderful trading week ahead. Cheers.